Central Bank Illinois came to Peru in 2017, and then we built our branch by Hy-Vee in 2019. So just a little background about the bank. We've got multiple facilities throughout the area, and most recently built in Sterling, which just opened about a month ago. Today we're going to talk about financial literacy. So we're going to kind of go into understanding credit and an overview of what credit means. So, what is credit? Credit is a contract between you and a credit provider for a specific purchase. Usually, we're purchasing a car or a home or some personal property. Usually it's installment loans, which means principal and interest payments are paid back to the bank or the credit union that you're borrowing money from. Principal is the balance owed, interest is the price you pay to borrow the money. Who's your lending team? You usually have a banker who you talk to by phone or in the branch, and it's your opportunity to deepen your relationship with your bank. You've opened a bank account maybe a few years ago and go in there once in a while. You haven't done a whole lot since then. So this is your opportunity to sit down with a lender at a bank and talk to them about borrowing some money. There's community banks where you sit and talk to a lender, and then there's some bigger banks that you talk with a lender, but your decision maker is usually a credit analyst. So it's a sum of facts. So different banks handle things a little differently depending on the size of the bank. What do you think is the most important thing when applying for credit? And it's the 4 C's of credit. Capacity, can you repay your loan plus interest? Capital, what do you have to contribute to the purchase? Character or credit, how reliable are you? And collateral, what kind of property or what kind of item are you using to back up your loan? What are you looking to purchase? For a home, you're looking for a car? What is going to be your chunk that you're looking to buy? So how important is each of the 4 C's? Capacity, are you able to repay your loan plus interest? Do you have a steady job, dependable income? If you're a welder, have you been in the same business for a number of years and just done different welding jobs? Just something that you have been doing for a while, or at least 2 years. Standard is 43% debt to income ratio. So what that means is if you make $1,000 a month, you don't want to have more than $430 worth of debt to pay each month. And that's kind of factored when you sit down with your lender, you're filling out your application, you're looking into what goes into your debt to income ratio. Your debt to income ratio is usually set at a federal regulation. Sometimes, some instances where there's compensating factors, a little bit higher debt to income ratio can be factored in and considered. If you have a lot of money set aside in investments or different things like that, you can factor in some different items that will offset that debt to income ratio. So how is the debt to income ratio calculated? You have to remember this is based off of gross income, which it means the money you earn before you pay taxes. So it's monthly debt obligations divided by gross income is your debt to income ratio. So below we have an example of 20 hours per week job, $80.25. Obviously it's been a while since we've updated this section of the slide, but bear with me. So you do 20 times 8.25 is 165 per week before taxes. 165 times 52 weeks, $8,580 per year divided by 12 months. You have 715 gross wages per month times 43%. 307.45 is available for monthly credit expenses, and then 407.55 is available for general living expenses. You don't want to have too much debt that you can't pay your bills. And so we stick to the 43% debt to income ratio. So what goes into that? The new loan payment is factored in, your credit card payments, your existing loan payments, if you have anything now, a current car or student loans, those are factored in, and rent payment. What doesn't go into the 43%? car insurance, utility bills, grocery money, gas money, daycare, clothes. You have to still be able to pay these other bills, but they're not factored into your 43%. So you got to keep in mind, you got 43% on paper, but you also have these bills that you have to pay for every day too. Then we go to the second C, which is capital. Are you asking the lender to provide all the funds needed to purchase the vehicle or the house? 100% financing. Most lenders want to see you put 20% down. It's depending on what you're purchasing, because it gives them less risk in the transaction. So how much risk are you taking? What are you contributing to the transaction? So when you open your checking account, your savings account with your bank, you want to set aside money for if you ever want to purchase something and you need to borrow money. And also we want to be saving right now, really high interest rates on accounts. So, and what's your ability to withstand adversity? So you get into a tough spot, you have engine issues, or something happens with your house, something breaks down. Are you able to handle taking care of those situations? So character is the third. How reliable are you? Have you had long-term employment? Have you been paying regular rent or mortgage payments? Are you current on your car payment? How well have you handled your checking account with your current bank? It all factors in. So you want to have a good relationship with your bank. You want to be able to sit down and go through this with them. And do you demonstrate a willingness to repay? Have you been paying your bills on time, paying Ameren or Comcast or things like that on time, or any credit that you currently have? It all factors in. So character equals credit. Loans you've already taken out, it comes up. History of paying on time, and we'll look at this. How are you handling your checking account with your current bank? And if you don't have any trade lines, which is usually credit cards, reporting, maybe you don't have anything bad reporting either. So recently there's been some changes in what we can use to offset not necessarily having any credit at all. We can use some different things like rent and payments, installment payments now. Potentially anything you pay monthly can help you if you don't have credit established at this time. So what makes up a typical credit score? Types of credit in use is 10%. And you want to keep this in mind. Payday loans or lenders don't report as well as banks and credit unions. So payday loans are usually considered more higher risk, they're higher interest, and they just don't report quite as well as regular credit offered from a bank or a credit union. Payment history is 35%. Current total debt, 30%. Length of credit history is a 15%. How long have you had that credit for? You want to apply for a new credit, then apply for new credit, then apply for new credit. Like your SAD request for new credit takes up 10% of that. So credit card debt ratio, you usually want to keep below 30% of the amount they let you use. So you want to keep credit card debt low. So it looks like if you have it, but you don't really need it. Character, no credit is better than bad credit. Sometimes you have overdraft protection lines that go bad or collections. You want to take care of any broken cell phone contracts or unpaid medical bills. Those can be detrimental to your credit. Warning signs that lenders tend to look for: making only the minimum payments month after month, paying rent or mortgage late, using money from one lender to pay another, and high risk or payday loans. This is just a chart on delinquency ratios by FICO score. So the lower your score, the higher percentage of you're just going to walk away from something. So lenders are looking at that when they pull your credit. Here is a credit card payment example. Credit card payments can be 0% interest if you do it right, even if you have a rate of 9.75. Say you borrowed $2,000. You can make your minimum payment of only $60.49, and they factor you at 120 months. You're paying $669 in interest alone. Do it on the bottom, you pay it all at one time, you pay no interest. Pay $500 a month, you only pay $41 in interest. So just something to keep in mind with credit cards. They can be a little dangerous. and you want to treat them correctly. Collateral. So what do we want to buy? Are we buying a house? Are we buying a car? What are we using for collateral? Do we have money in a savings and we just want to use that as secured, a secured loan, which can be a little interest rate lower. If you have to remember that it can be repossessed and sold if you don't pay what you owe. And you can do a secured loan, which minimizes the risk that your lender takes when initiating your loan. So say you have $10,000 sitting in an account. If you have that, you can use that to collateralize your loan or secure your loan at a lower interest rate than you could if you didn't have that. So there's always a lot of options. There are a lot of rules and regulations banks have to follow when they lend money to consumers. We have to make sure that we're treating everyone the same way. We're prohibited from offering terms to one borrower that we can't offer to another borrower with a similar profile. Everybody's got to be treated the same. So what happens if maybe I don't have sufficient credit history, or I might have overdrawn my checking account once in a while, or just not, like the whole box doesn't quite fit? Will I be automatically declined? Lenders can evaluate overall risk. So community bank, a lot of the lenders have like lending limits and things like that, where they can look at your whole picture. Are you really good at going to work for 5 years in the same type of trade, but you just don't have any established credit, but you've been paying rent for the same number of 5 years? You can look at the whole thing. A weakness in one of the 4 C's can be accompanied by an abundant strength in another one. So a lot of times lately, especially with buying houses now, everybody's got to hurry up and buy a house. A strong cosigner helps overcome the lack of proven credit history. So we're seeing a lot of mom and dad signing or co-signing for mortgages with their kids to help kind of offset some, that maybe they just paid rent for a while, but they found the house that they really liked. It offsets the weaknesses there. And when you apply for your first loan, it's expected you're not going to have a strong credit history. We're going to focus first on any negative reporting and your job and how much you're investing in the transaction. So, and it helps to have an established relationship with your lender, and at the bank, we look at that too. But we're mainly looking for no negative information and to take care of that. How do I start building a good credit history? You can do a lot of secured items, not a lot, but some. You can do a savings secured term loan borrowing. So if you have that $10,000 sitting in your savings, it's earning 3%, and you can pledge that and use that money to set up a relationship with your lender and make payments back. You're essentially paying yourself. It's a safe way for you to establish good credit history and length of time. You can do a secured credit card, and that's where you usually do like $500 in an account with a credit card company, and they lend you back your $500. It sets up good credit history by making your payments on time, and then that credit card company can switch you to an unsecured credit card. The thing about that, sometimes there's an annual fee with that, but it's a good way to set money aside and build up credit. They know you're serious and you're looking to set up a good credit history. Ways to improve your credit score: make sure you pay your bills on time and currently. Don't open a lot of new accounts rapidly. You get excited, you get approved for a credit card, you want another one. Don't set up a whole bunch at once. Make sure you take care of things. And correct any mistakes. We'll talk about this when we look at a credit bureau. Shop for loan rates in a focused period of time. So with trusted financial institutions, you want to look for banks and credit unions that you know have been around a while and are looking in your best interest. Keep balances low on revolving credit. We mentioned that. We want to keep it 30% or below. Pay off your debt. More debt, less debt you have, the less interest you're paying. And check your credit report. We'll get back to that. Well, part of it is, why should I monitor it? Give you perspective on how your lender sees you. Possible identity theft. We've seen an uptick in that, especially with unemployment situations and things like that. Criminal gains access to your personal information and applies for credit in your name. It can occur online or offline. And until you go to apply for a loan, you don't necessarily know that this has happened. So identity theft prevention, don't give your social security number to anyone. Shred receipts, bank statements, don't use credit card offers, keep an eye out for missing mail. And this was kind of surprising. It says, don't mail bills from your own mailbox with the flag up. Well, everybody I know does that if they have a mailbox. So it's just something to keep in mind. The mailman, he can check your box, mail it from work, use a drop box. Flag up is a flag, red flag that you have mailed in there that needs to go out. Also, you want to review your monthly accounts regularly for any unauthorized charges. A lot of people have bank statements online now. Nobody's looking at them. I suggest you look at them once in a while, make sure there's nothing there. You don't have 4 Netflix charges or things like that, 2 Amory bills and one's not your name. Order copies of your credit report once a year, and I'll show you how to do that. Choose to do business with companies you know are reputable. I mentioned that before. Pick banks and credit unions that have been around a while. When conducting business online, make sure your browser padlock key icon is active. That, when we looked into this, we had to figure out what that meant, and I'll come back to that when we get to a website. Don't open emails from unknown sources and use virus detection software. If some guy sends you an email with a link attachment and you haven't talked to this guy, I suggest you do not open it. Businesses, if you're not working with them, don't open any links or things like that. Check your PINs and passwords. And then there's fraud units at 3 of the credit bureau agencies, which we'll look at also. So, any questions so far? Okay. Well, we are going to slide over to, this is an IRS identity theft form that we're going to look at. And up here, if you can see where my mouse is, that is where you can tell if your connection is secure. If you can see that. Didn't know that. That was new for me. So we have used this recently where people come in and said, we were talking to somebody or we applied for things and we found out that somebody's also filing a tax return in my name. So you fill out this form. It's online for anybody to use. And you can send this into the IRS so that they know to watch your items. You can also set up a credit freeze. And what I suggest you do is, if you know this happened, if your social security number got stolen, go into your bank. That's what your bank's there for, your credit union. They should help you fill this out and send it in. And then we're going to go to a credit bureau example. So this is what we call a tri-merge credit bureau. This is what you use for purchasing a house. This is an example of bad credit and good credit. So up at the top, Experian, TransUnion, and Equifax, they all 3 report when you do a tri-merge, when you buy a house. And all 3 of them factor into the weight of the credit score they pick. I believe they pick the middle score at this point. So this is 2 people applying for a mortgage. Second page is they always do a verification of address to make sure somebody's not applying for credit in Texas in my name. That's usually a red flag. And then the third page, it kind of goes over it's trade summary. So if you had a mortgage, your auto loans, your installment loans, your education loans, it's all going to summarize right here on this third page. And all the credit bureaus are usually fairly similar. So it goes over your applicant and co-applicant. This page is, okay, well, I've got some bad scores, and it's why, and it tells you why. So most recent account opening is too short, something's not being paid on time, collections. And then it goes over what credit you have. So in this case, that's Westlake Financial. You can see each section. Let me find my mouse here. This is when it was open. That was when it was, the balance it started with, $8,000, where it's at now, and are they paying as agreed? And when you do your annualcreditreport.com, which I'll show you how to do, it'll show all this. You don't get your credit score with annualcreditreport.com, but you get all of this trade information that you can make sure that there's not anything out in your name that you didn't apply for. Right here it shows this is a American Collect, this is a collection company, so this is a derogatory item. It's a medical bill, and it's reporting. So these are things you want to clear off your credit when you can, and a lot of collection companies will work with you to set up payment plans. You don't want to ignore it. I'm going to scroll down a little more. So these are all different banks, different companies that they've gotten. Here's Compeer, and that's usually agriculture. They mainly deal with farmers, things like that. So if you see any red, that means they're not paying. I'm trying to find you one here. Here's some red. Capital One, they were 3 times 30 days late, 3 times 60 days late, 7 times 90 days late. This was set for collection. So these are things you don't want a lender to see on your credit report. You want to make sure you pay your bills, take care of your debts, try not to get too far over your head. At the end of this, it says your credit score and the price you pay for credit. So it says what your score is and why. And then it gives you, if you don't agree with that, this is a company that you need to work with to work on that. And they say rule of 3, if you see something out here that's not yours, dispute it 3 times, document it, and if they can't prove it's yours, they have to remove it from your credit bureau. Just keep that in mind. And then I'm going to go to, so every year you get a free credit report. So if you go to annualcreditreport.com. This does not give you credit report. You can use, was it Credit Karma is fairly close, but when we pull credit at the bank, it can be surprisingly off, but it's a good one to kind of monitor for any issues that might come up. This annual credit report, don't use a different website. Use annualcreditreport.com, and you want to request your free credit report. And you can get these, just do them once a year. There's some things embedded in here where they try to get you to buy your credit score or buy other things. Just do that. Free annualcreditreport.com. That's all you need. It shows you where your credit looks like. And a lot of, like I said, you can use Credit Karma, or some of the credit card companies recently have started reporting your credit to you. So you just go right, request your free credit reports. And you can do all 3 at one time, or you can do them staggered throughout the year. So 3 steps to your free online credit report. Set yourself a reminder to check it again. If you're unsure of if you have any credit, or say you had a loan with a company but you're not sure they reported it, go to your bank, sit down with the lender. We're not always going to say no. We're going to say this is what we need to do to get it done. So any lenders out there to help you out, not to just send you on your way. So take time, sit down with them, call them or text them or email them, and they're there to help you out. Okay, any questions? We do have, there is an opt-out form that we'll leave here. And what it is under the Fair Credit Reporting Act, the reporting agencies, Equifax, Experian, and TransUnion are now included to sell your information. So anytime your credit is ran, regardless of who's running it, they can sell it off, and there's a QR code to opt out of this. So you go and buy a house, and all of a sudden you're getting a whole bunch of mailings from credit card companies, from mortgage companies. You even apply for a mortgage loan, and they pull your credit, they're going to start calling you. So I'll leave these here for a QR code. Also, I'll leave at the library credit reports and credit scores, which is an overall information. And then I did print out like an Experian example of a credit bureau. So just helpful things to look at. Always stop at your bank and ask them questions if you have them. Okay? All right. Well, thank you very much.
Thank you.